Hello students, how are you? Uh, in this lesson, we are going to discuss again the sacrificing profit sharing ratio. Uh, so straight away we can go to the question, right? You can understand while we are doing the question, okay? Question: Francis and Kim are partners sharing profits and losses in the ratio of 4 is to 3 is to respectively. Their balance sheet as on 31st March 2020 as follows. Non-current assets: land 20,000, machinery 25,000, cash 15,000, debtors 20,000, profit and loss brought forward loss 7,000, stocks 12,000, right? Francis 40,000 capital, Kim 30,000 capital, and current liabilities payables 10,000, outstanding expenses 5,000, general reserves 14,000. Right. So on 1st April 2020, Mr. Kim is admitted into the partnership for 1/5 of share in profits. The terms of the partnership are given below. Right, he has to bring 40,000 as capital. Then first entry, cash account debit 40,000, capital account credit, right? Capital of Zim is 40,000, right? First double entry is over, right? So narration, you have to write the narration, right? First double entry is over, and capital, and 21,000 is goodwill. Goodwill, the double entry in the ledgers: cash account 40,000, debit 40,000, and capital account credit, right? Capital account credit. Balance cash 40,000, right? What is the balance? 40 and 30, no? 40 and 30,000, right? So 21,000 goodwill. Goodwill, goodwill account, cash account, debit 21,000, goodwill account credit. The account credit 21,000. Being adjustment made for the goodwill brought in by who? Zim. Goodwill account, cash account, goodwill account, cash 21,000, right? 21,000 debit, goodwill, right? Goodwill 21,000. Okay. Now we have to see the profit sharing ratio. The new old profit sharing ratio 4 is to 3. 4 is to 3. That means 7 upon 4, right? And new profit sharing ratio, they have given at the last 2 is to 2 is to 1. 2 is to 2 is to 1. 5 upon 2, 5 upon 2. Right? So here we have to see the sacrificing ratio. We have to deduct this one from this one from this. If we deduct, here LMC is 35, 7 into 5 35, right? 5 into 7 35, 5 into 4 is 20, 7 into 5 35, 7 into 2 is 14, right? Here it is about 6 upon 35. 6 upon 35. This one is 35. LCM LMC is 35, and 5 15. 5 into 3 is 15. 7 into 5 is 35. 7 into 2 is 14, right? Then it is 1 upon 35. So if you eliminate this, 6 into 1 is the sacrificing ratio, right? 6 into 1, right? So we have to distribute the goodwill according to this sacrificing ratio. Sacrificing ratio is old ratios 7 7 by 4 by 7, and new ratios 2 by 5. That is 2 is to 2 is to 1. That means 5 2 by 5. 2 by 5, 4 by 7 minus 2 by 5 equal to 6 by 35, right? Here 3 by 7 and minus 2 by 5 equal to 1 by 35. So 6 into 1, right? If you eliminate the 35, 6 into 1. Okay, that is the ratio. So goodwill account debit, right? When you are distributing the goodwill account debit 21,000. Capital account of former employee, former previous profit sharing ratio, sacrificing ratio, previous partners, 6 into 1. 6 into 1, 7. 3 3 3,000 and 18,000, right? This is the amount goodwill share, right? Being goodwill distributed among the all partners, right? So here goodwill capital account 21,000, and goodwill account 18,000 and 3,000, right? 18,000 and 3,000. Okay, then okay, so goodwill is over, capital and goodwill. Second, B1 is stock to be reduced by 10%. Stocks to be reduced by 10%, right? Here we will say machinery, right? Right, machinery brought forward is 25, right? Right, 25,000. Here stock is to be reduced by 10%. Stocks is 12,000. It has to be reduced by 10%, means carried down value should be, right? Carried down value should be 1,200, 10,800, should be 10,800, right? Brought forward value should be 10,800. Then this is 12,000, this is 12,000. So what is the difference is 1,200. This should go to the revaluation account. Revaluation account. Revaluation account. So revaluation account debit stocks. Stocks 1,200. Stocks So revaluation account debit, account debit 1200 and credit to the stocks. Stocks credit 1200. It is finished. Yes. Then fifth one, this is machinery. Machinery reduced by 10% and machinery by 1700. Machinery should be reduced by 1700. So 1700 should go to the revaluation account. So revaluation account debited to machinery, right? 1700. So carried down value should be 23,300. Brought forward should be 23,300. Okay, machinery. Right. So because machinery value had been brought down by 1700, right, the by 1700, so we had to reduce the transfer the revaluation account. It has to be reduced, so 23,300 machinery. So machinery account credit and revaluation account debit, it is a loss. Okay, there is an unrecorded liability in respect of rent. So rent of due is 1000, rent account 1000 debit, revaluation account, or not the revaluation account, unrecorded, no. So we have to say profit and loss account, PNL, profit and loss account 1200. Profit and loss, where is a profit and loss? Profit and loss account 1000 debit, PNL, debit 1000, credit 1000, sorry, rent account debit 1100, rent payable is credit, right? Rent payable will credit, right? PNL 1000, PNL should be debited 1000, rent payable, right? 1000. And unrecorded investments of 2000. Investments, where is the investment account debit 2000, right here. Wait, okay, investment we see later. We will see this one, rent, stock silver, and rent payable, PNL account debit, P and L account debit 1000, rent payable account credit 1000, right, being adjustment before the rent payable. Right. 6 is investment account debit, account debit investment debit 2000, right? And we have to, whether we have to make it to charge it to the cash, it is better to charge it. It is not the investment, not the loss. right? Cash account, cash or bank account, 2000, right? Investments, right? Investments account debit 2000, cash, cash payable, investments 2000, right? It is not an expense, right? So that's what I have made it like that, right? Investment account. So land valued at 25,000. Land is valued at 25,000. Then carrying down value is 25. Carrying down value is 25,000. Sorry. Land account revaluation 5,000. Revaluation account land 5,000. Sorry. Revaluation land 5,000. Right? So land debit 5,000. Revaluation account credit 5,000. This is being land revalued. Being land revalued. Right? Land price has increased. Increased means carrying down value they have given. So 25,000 we have put it. Opening balance is there 20,000. Carried down balance is there 25,000. So brought forward is 25,000. So what is the difference? Difference is 5,000. 5,000 has to be transferred to the revaluation account. Revaluation account credit 5,000 and debited to the land account 5,000, right? Being land revalued, right? Create a provision for bad debts 5% on debtors. What is the debtors balance? Debtors balance is 20,000. 5% is 2,000. Provision for bad debts. Revaluation account debit provision for bad debts. How much? 1,000. Provision for bad debts account credit revaluation. Revaluation account 1,000. Right? Then eighth is revaluation account debit. Debit 1,000 and provision for bad debts 1,000. 1,000. Right? 1,000. 5% on bad debts. So the all the adjustments we have finished all the adjustments, right? So we had to balance the amounts on the here revaluation account. Say 5,000, 5,000, 3,900, right? 3,900. Then 1,100 is the cap, goes to the profit and loss. Right? Profit and loss account credit. credit revaluation 1100, right? 1000, right? So we have transferred cash account, how much? 76,000. 76,000. Then 74,000 the cash carried down, brought forward 74,000, right? Profit and loss account has to be transferred to the profit and loss appropriation account, right? 8,000, 8,000, 6,900. Profit and loss appropriation account PNL is 6,900, right? From that you have to transfer the capital account of F and K. F and K according to the all profit sharing ratio, that is 4 is to 3. 6,900. 4 is to 3, 7. Right? 6,900 divided by 7. Right? 6,900. Then 63. 9. 63. 8 means 4. 35. It is coming in the odd numbers, right? Odd numbers. Odd numbers. So we had to profit and loss appropriation account 6,900 is equal to 985. 85 means 990. 985 into 4. 3,940. 3,940 and uh, 3,940 and 2,060. 8, 9, 960 2960. 2960. This is the profit share by the partners, right? That is revaluation we have done, and profit and loss account. Right. So capital account, revaluation, yeah, profit and loss account, profit and loss appropriation account debit, profit and loss appropriation account debit 6,900, right? In and P&L 6,900, right? And capital account F and K 3,940, 3,940, 2,960, 960, right? And P&L appropriation. So account credit 6,900, right? This is the double entry. So capital account P&L appropriation, P&L appropriation, creation account 3,970, 3,940, and 2,960, 2,960, right? Here balance carried down, carried down, right? 40,000 balance brought forward, brought forward, 40,000, 40,000, 40,000, 40,000, 33,000, 33,000, 30,040, 58,000, 30,040, 58,000, 58,000, 60, 0, 54, 54,000, 54,060, right? That's the balance. Here we will say 54,060, 60, 30,000 40 and 40,000. 100 for 8, 12, 124,000 and 100, right? And we'll balance the accounts, right? So partners current account we had taken, revaluation closed, cash account 74,000, cash account 74,000, right? And stocks account 10,000, stocks account 10,000, and goodwill finished, land 25,000, land 25,000, and provision for bad debts 1,000, 1,000, then 19,000, rent 1,000, rent 1,000, investments 2,000, investments 2,000. Profit and loss finished. This is also finished. General reserve we have to transfer. General reserve, right? Capital account. Capital account 14,000, right? We'll transfer it here, right? Capital account, general reserve. Reserve. General reserve. How much? 4 is to 3, 7. 7. How much the general reserve is? 14,000. 2,000. 8,000. 8,000 and 6,000. Right? So balance carried down is 54,060 and 30,040 and 40,000, right? 40,000, 54,060, 30,040 and 40,000. Then carried down value will be 46,060 and 24,040 and 40,000. Carried down balance, brought forward balance, carried down balance, right? 46,060, 24,040 and 40,000, right? General reserve. General reserve so 14,000 debit. Capital account F and K, 8,000 and 4,000, 6,000, right? Being capital, general reserve provided. It is general reserve. So what is the amount we had to put here? 46,060 and 24,040, right? 100, 0, 1, 5, 5, 5, 5, 5, 5, 7, 7 and 11. right? So general reserve machinery 23,300. 23,300. 8, 8 and 10, 50,300, right? This is 4 and 13, 8, 9, 10. 153,300, right? 10, 5, 15, 16,000. Reserve has to be added. Okay. General reserve reserve that is 8,000 and 6,000, right? 6,000. Then 36,040 and 62,060, right? 62,060, 62,060 and 36,040, 36,040 and this is 40,000, 40,000. Okay, it's okay. So there is a 300 rupees is difference, right? Right here 5,000, 3,900, then 1,100 is to the profit and loss account. 1,100 goes to profit and loss account. 1,700, right? 1,200 stocks reduced by 1,200. Then stocks should be 10,800. 10,800, right? 800. 10,000 stocks should be 10,800, right? 800. Then this is 800. This is 800. 800 and 100, right? 100 and 1, 3 and 4, 154,100, right? Here we will see 62,060, right? 62,060, 36,040 and 40,000. 100, right? And 8, 8, 8 and 10, 13, 138, 138, 138 minus 16, 16, right? 100, 8 and 6, 4, and 1 is there, 4, 4, 4, 5, 56, 154,000 and 100, 154,100, 154,100. Okay, what we have done is here general reserve, instead of crediting we have erroneously debited. That is a mistake we have done. Here general reserve we have correctly debited general reserve account. Here it has to be credited. We have debited erroneously. And uh, and what else happened? Provision for the stocks balance should be 10,800, right? We have put 10,000, so that errors made the balance sheet not balancing. Now it is corrected, the mistakes had been rectified and it is balanced. Okay, so here main thing is what you call the sacrificing ratio, right? Sacrificing ratio. So you are, when you are additioning, doing the addition work, you have, must be careful, right? Okay, we have to see before balancing, you have to see all the T accounts are transferred or everything is balanced, right? If that has happened here, general reserve, not we have not made the transferred the general reserve, that's what this problem arose. Otherwise it would have been okay, right? So I think you would have understood the explanation, and you would have learned if you make mistakes and how to rectify, how to get rid of it, right? So I hope you would have understood the lectures, and I hope to meet you in next lectures. Okay, thank you.